What's happening, crypto enthusiasts? Welcome back to Bitcoin Bulletin, your ultimate source for the pulse of the digital asset world. The market is absolutely electric right now, with news dropping faster than you can say, blockchain. We're seeing seismic shifts, bold moves, and strategies that are redefining what it means to hold digital wealth. Get ready, because you're about to get the inside scoop on the developments that are shaping the future, and you won't want to miss a single second. First up, we're diving deep into the evolving landscape of digital asset portfolios, exploring how the dominance of one major player is shifting, while a whole universe of other coins is experiencing a renaissance. It's a story about diversification and the new frontiers of wealth management. Then, we're heading to Japan, where a pioneering firm is making an astonishing commitment to Bitcoin, aiming to control a significant chunk of the total supply. We'll break down their ambitious strategy and what it means for the market. Next, we've got a fascinating look at investor behavior, with outflows from one major digital asset doubling those of another, signaling a dramatic pivot in where capital is flowing. Is this a temporary fluctuation or a fundamental shift? We'll get into the details. And finally, we're touching down in Hong Kong, where a groundbreaking decision is being made about corporate currency, potentially opening new doors for digital asset integration in major financial hubs. Stick around, because this is the information you need to stay ahead of the curve. Don't forget to smash that like button, subscribe for all the breaking news, and hit that notification bell so you never miss an update. The shifting sands of digital wealth. Prepare for a major realignment in your crypto portfolio strategy. As the market matures, we're witnessing a fascinating trend. The dominance of Bitcoin, while still significant, appears to be subtly waning, making way for an exciting altcoin renaissance. This isn't just about price fluctuations, it's a fundamental shift in how investors are diversifying their digital asset holdings and seeking new avenues for growth beyond the undisputed leader. We're talking about a strategic rebalancing act that could redefine long-term investment success in the fast-paced world of digital finance. The question on everyone's mind is whether this marks a temporary correction or a permanent alteration in the crypto hierarchy. This deep dive will explore the data, the market sentiment, and the expert analyses that explain why investors are increasingly looking beyond Bitcoin to capture value and manage risk in an ever-evolving ecosystem. We'll unpack the metrics that show this changing dynamic and what it means for the broader digital asset market. The narrative is shifting, and understanding this transition is key to navigating the future of crypto investments effectively. The landscape is changing, and staying informed is your greatest asset. But the story of shifting strategies doesn't end there. Get ready to witness an incredible commitment from a Japanese firm that's going all in on Bitcoin. Japan's Bitcoin bet, a 1% target. This is not a drill. A major Japanese firm is making an audacious move to acquire a full 1% of the entire Bitcoin supply by 2027. Metaplanet, a leading treasury firm in Japan, has successfully raised a staggering $881 million through an equity issuance, with the explicit purpose of expanding its already substantial Bitcoin holdings. This aggressive strategy sees them channeling corporate capital directly into the world's largest cryptocurrency, aiming to amass a colossal 210,000 BTC. Currently holding 18,991 BTC, valued at over $2.14 billion, Metaplanet's recent acquisitions, including a $11.8 million purchase of 103 BTC, are rapidly positioning them as the seventh largest public Bitcoin holder globally. The implications of this are massive, especially with their upcoming inclusion in the FTSE Japan Index, a move expected to unlock significant institutional capital flows. This isn't just about a company buying Bitcoin, it's about a nation's corporate strategy embracing digital assets as a core reserve, potentially influencing global investment trends and validating Bitcoin's role as a store of value. The company's stock performance, soaring 147.9% year-to-date, speaks volumes about investor confidence in this bold approach. With plans for preferred share issuance and even high-profile attendance from figures like Eric Trump, the cross-border interest is undeniable. The success of this strategy hinges on sustained faith in Bitcoin's long-term value proposition especially as prices hover around the $113,000 mark. This is a true testament to the growing institutional embrace of Bitcoin and a strategy that's capturing global attention. Speaking of investor sentiment, we're seeing some dramatic shifts in where capital is flowing, and it's not all going to Bitcoin. The Great Crypto Rotation, Ethereum SIR. Get ready for a seismic shift in investor preference as we witness a dramatic flip in capital flows between major digital assets. In a move that has the market buzzing, outflows from Ethereum ETFs have reportedly doubled those of Bitcoin, signaling a significant pivot in where institutional and retail investors are placing their bets. This comes after a period where Bitcoin ETFs experienced a 6-day outflow streak, totaling a substantial $1.43 billion, following a price dip to around $111,000. However, the narrative took a sharp turn as Federal Reserve Chair Jerome Powell delivered a more dovish-than-expected speech at Jackson Hole. This boosted sentiment, leading to a reversal with $219 million in inflows for Bitcoin ETFs by August 25. But the real story here is Ethereum's performance. On the same day, Ethereum ETFs raked in an impressive $443.9 million, nearly double Bitcoin's intake, with BlackRock's ETHA and Fidelity's FETH leading the charge. This surge highlights a growing institutional confidence in Ethereum, even amidst broader market volatility. Analysts are pointing to several factors. Reduced Bitcoin exchange inflows from major platforms like Coinbase and Binance suggest less selling pressure and tighter supply, which is typically bullish. Yet, some whale activity, including significant BTC to ETH rotations, indicates profit-taking and a strategic shift. While technical indicators offer mixed signals, with some warning of potential Bitcoin corrections below $100,000, the macroeconomic backdrop remains critical. Upcoming PCE data and Fed rate decisions will be key. For now, the market is grappling with institutional flows, sentiment shifts, and economic uncertainty, with Ethereum ETFs clearly capturing more investor interest. But the global adoption of digital assets isn't just about ETF flows. It's also about how corporations are integrating them into their core operations. Hong Kong embraces Bitcoin, a corporate currency shift. In a landmark decision that could redefine corporate finance in Asia, a Hong Kong firm has begun accepting Bitcoin for share purchases. This groundbreaking move mirrors the growing global trend of institutional acceptance of cryptocurrencies, echoing initiatives seen in Japan with Metaplanet and the U.S. efforts to establish a strategic Bitcoin reserve. By integrating Bitcoin into its capital markets, the company is not only signaling strong confidence in digital assets, but also potentially enhancing liquidity and diversifying its investor base through crypto-denominated transactions. This development is particularly significant for the Greater China region, potentially accelerating regulatory discussions and encouraging traditional institutions to view digital assets as strategic tools for capital generation and diversification. While the specific firm remains undisclosed, this initiative represents a bold step in adopting blockchain technology for corporate fundraising. It aligns with broader global movements, including Japan's Metaplanet raising $880 million for Bitcoin acquisitions, and the U.S. government consolidating seized digital assets into a strategic reserve. The U.S. administration's commitment to digital assets, holding approximately 200,000 BTC, further validates Bitcoin's role beyond speculation. Financial experts acknowledge the inherent volatility and regulatory challenges, especially after recent price crashes below $110,000, underscoring the need for robust risk management. However, the sustained interest from corporations and governments suggests a growing belief in Bitcoin's strategic financial utility. This Hong Kong initiative serves as a powerful example of how traditional finance is adapting to the digital economy, paving the way for new financial instruments and capital generation strategies. So, what does all this mean for the market moving forward? Let's recap the biggest stories and what you need to know. All right, everyone, that's a wrap on another action-packed Bitcoin bulletin. We saw a major shift in crypto portfolios with altcoins rising as Bitcoin's dominance slightly dips. Japan's Metaplanet is making waves, aiming to hold 1% of all Bitcoin by 2027 after a massive $881 million raise. Ethereum ETFs are attracting double the inflows of Bitcoin ETFs, showing a clear investor rotation. And in a huge step for corporate adoption, a Hong Kong firm is now accepting Bitcoin for share purchases. Don't miss out on any of these critical updates. Hit that like button, subscribe to Bitcoin Bulletin for your daily dose of crypto news, ring that notification bell, share this video with your network, and follow us on all social platforms to stay in the loop. We'll see you next time.